Stocks close higher on Wall Street, although they remain on track to register the worst month since 2023. Bond yields come off 15-year highs, while revised GDP data also indicates that the U.S. economy grew in line with estimates in the second quarter at 2.1%. Asian markets open largely higher on bullish cues from Wall Street. The GIFT Nifty is also implying a higher start for the Indian market. Oil prices slip after hitting their highest levels in over a year for most of this week. Brent hits $97 a barrel but comes off highs to settle around the $95 a barrel mark. In a confirmed news break, Chola Investment Finance launches a 1,200 crore QIP. It will also raise up to 2,000 crore rupees via debentures. Meanwhile, ahead of its planned shift to a new trading platform on the 3rd of October, the SEBI asked MCX to keep the rollout in abeyance as writ petitions over the new trading platform remain pending before the High Court. NSE index changes come into effect from today. Stocks like TVS Motor, PNB and Power Grid are likely to see inflows. Meanwhile, after its inclusion in the JP Morgan Emerging Market Bond Index, India still remains on the watch list to be included in FTSE bond indices. Good morning in the Mumbai News Center. I'm Sonal Bhutra. You're watching Puff Breakfast. It's a Friday morning and it is the last trading day of the week as well, and a new day of the September or the October series actually. But we did see a lot of moves in our own markets yesterday, but right now we'll focus on the global markets and take a look at what the Asian markets are doing. Most of them are shut. We have the Kospi, Taiwanese index and China, which are not trading today, but taking the positive cues from the US markets, the ones which are open are trading in the green. For instance, Hang Seng is up 1.9%. We have the others, the likes of Straits, which is up 0.2%. And that's largely the picture. Nikkei too is in focus, but it's lower on the back of the inflation print that was released yesterday as well. The GIFT Nifty, that'll come up for you on the screen, and that one is indicating that the start for our own markets could be absolutely flat with some negative bias. But that is something that'll be key to watch, because yesterday we did see a big sell-off in our own markets, 200 points lower on the Nifty, but right now it's indicating an 8-point cut. So that's an important level to watch out for as well. Let's talk about the U.S. markets now. Wall Street ended Thursday's trading session higher after losses earlier this week. The S&P gained 0.6%, while the Dow Jones rose over 100 points. The tech-heavy Nasdaq Composite advanced 0.8%, outperforming the other indices. The gains came as the 10-year Treasury yield backed off from a fresh 15-year high. However, U.S. stocks are set to end September with steep losses. The S&P has lost 4.6% so far. The Nasdaq Composite is off nearly 6%. This month will be the worst in 2023 for both indices. Dow Jones, meanwhile, has given up 3% in September so far. Let's focus on some important cues now from the U.S. markets, and these are macro cues. Real GDP in the U.S. threw up no negative surprise. The economy expanded to 2.1% in quarter two, in line with economists' expectations. The reading brought relief to Wall Street in a week that saw sharp losses for most U.S. stocks. In other key cues to track, investors have their eye out for the latest personal consumption expenditures price index reading due later today. The index is a key gauge for Fed and economists. They expect it to have advanced 3.9% year over year in August and gain 0.2% on a monthly basis. Okay, these are two important macro data that we'll be tracking closely as well. On that note, let's listen into the Bank of America CEO, Brian Moynihan, who spoke to CNBC's Becky Quick about the prospects of a soft landing.
Our strategies are no recession, very slow growth, 0.5% annualized GDP growth, second and third quarter. So it slows down, troughs, and starts coming back out, gets back up to above 1% at the end of next year, i.e. 24, and then finally gets back to 2% at the end of 25. So this is a low thing.
Gradual. So would you call that a soft landing? Or
that's a soft landing by definition, because it's not.
It's not actually.
Now, the interesting thing is what caused them to change that. It was the consumer early on. What happened, if you're in a, in 22 fall, heading into in a rate structure and all that stuff, and they're going to push it in, they have to, it's the only way to correct it, the consumer kept going. What's changed now is the consumer slowed down, so that means you've got to now have more risk that you could push the other way.
Okay, that is the opinion coming in from Moynihan. But with that, let's move on. As U.S. debt levels soar, Ray Dalio, founder and chief investment officer at Bridgewater Associates, heeds caution, citing worries about the bond and treasury markets and supply chain issues. Let's listen into what he had to say.
My worry is of the bond market and the treasury market. it got insane when negative interest rates, and also you have interest-only loans, so you didn't have to pay back anything. They would give you the money, you no interest, and no principal payments. So it got crazy. We created of course, you send out a lot of checks to people. The amount of money that was sent out for checks for companies was about twice as much as they lost from income. And so a great deal of money was sent out. And of course, that gets spent. And so it's not surprising that we have inflation. Plus, with the conflicts, we had the supply chain issues.
Okay, all right, it's time to get you the final update in our global market wrap this morning. European markets snapped a 5-day losing streak and ended in the positive territory on Thursday, with the French CAC up about 45 points, the German DAX gaining over 100 points, and the British FTSE closing about 9 points higher. Inflation in Germany fell to the lowest level since the start of the war in Ukraine. Consumer prices rose 4.3% in September versus an estimate of 4.5% and a reading of 6.4% in August. Food prices continued to show above average growth and rose by 7.5% year on year, while energy prices were only 1% higher for the year. And getting you some updates from the commodity space, crude oil prices fall after reaching their highest level in more than a year. Brent crude prices have eased to $95 per barrel after trading above $97 for 2 straight sessions amid tight supply conditions. Meanwhile, crude stocks at a key storage hub in the U.S. fell to their lowest since July 2022. The market will now closely track the OPEC meet due next week. Okay, all right, that's all about the global cues. We'll slip into a break now. When we come back, we'll see how these global cues will impact our own markets, and it's the start of a fresh series as well. Stay tuned for that. Welcome back. You're still tuned into Power Breakfast. Well, it's time for our Power Prep segment. We have our research team joining in with what the trade setup is looking like, the stocks that will be in focus, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Ekta, let me come across to you first up. Well, last day of the trading week, but first day of a new series. What is the market setup looking like today?
Thanks for that. Well, it might be a Friday and it might be the start of a new series, but yesterday was a little bit of a weak session for us. The markets were unable to sustain their gains, something that we had not seen previously in the sessions before. So the sensex and the Nifty ended at nearly 1 month closing lows on expiry day. 43 out of the 50 stocks were in the red. We had, while the DIIs net bought around 2,700 odd crores, we had the FIIs that net sold over 3,300 odd crores. The Nifty, however, was up around 1.5% for the September series as a whole. So this real trepidation really was limited to yesterday's trade. But the markets seem to be weighed down by the crude prices, highest level in 2023, higher for longer rates, higher yields, dollar, concerns over China's property market. But this morning, specific to today, there is some amount of risk on which has taken place. So crude oil has softened, US markets ended higher, Europe snapped its 5-day losing streak. Asia, whichever markets are open, are largely higher in today's trading session, and the gift Nifty is indicating an implied start, which would be a little bit on the flattish end. Now watch for the intraday low of 19,492 being protected and the 50-day moving average of 19,634. In terms of other cues to watch out for, well, it is definitely going into a long weekend, so that is a positive. But nonetheless, from a market's perspective, maybe there could be positions which are closed. RBI policy on the 4th to the 6th of October next week, and we have the World Cup warm-up matches which are beginning today, September 29th till the 3rd of October, and then the World Cup kicks off on the 5th of October. And then obviously we do have earnings season to reckon with as well.
Okay, yes, those are a lot of cues. Ekta, thank you so much for bringing us up to speed with all of them. But a lot of stocks that will be on our radar as well. Vivek has this list. Hey Vivek, good morning.
Well, good morning. Quite a few important stocks, a lot of news flow coming in at the last minute as well. First on our list, MCX, the launch of the much-awaited new commodities trading platform has been kept in abeyance by SEBI. So now what's actually going to happen is that the go live that was supposed to happen on October 3rd will now be deferred, and the new date has not yet been given. So some uncertainty continues as far as MCX is concerned. The next stock on our radar is Cholamandalam. Remember, it's a confirmation of a CNBC TV18 news break that was broken by our reporter Sudarshan. So, Cholamandalam has gone ahead and launched a QIP worth 2,000 crore rupees. The indicative issue price for this particular QIP is at 1,180 rupees a share, a discount of slightly over 3% to the current market price. The company is also looking to garner over 2,000 crore via the compulsory convertible debenture route. The next stock on our radar, it's a surprising development from Navin Fluorine. The company's MD, Rajesh Wellington, has resigned with effect from 15 December 2023. Keep an eye out for Imami as well, an interesting foray by the company into the juice category. They've gone ahead and acquired over 26% stake in Axiom Ayurveda. The brand is known as Aloe Fruit. NLC India, an operational update coming in there. The company is looking to set up close to 2,400 megawatt coal-based thermal power project in Odisha. The company already has tied up with long-term PPAs for this particular power project. And lastly, Shreyas Shipping, this particular company, has received an offer as far as delisting is concerned. However, what has been the discovered price for the delisting, which was close to 890 rupees a share, that has not been met by the acquiring entity. The acquiring entity has given a counter offer of close to 400 rupees a share. The current market price is 473. So I expect some pressure on Shreyas Shipping as well today.
Okay, all right. So a couple of those names that will be on our radar. Thank you so much for that, Vivek. But let's talk about all the cues from the F&O space. Manglam is joining us now. Hey, Manglam.
Good morning. So we are starting the October series from today. And October series is historically been a good series. In fact, I was looking at last 5-6 October series, and 4 of the last 5 series have seen big moves. In fact, October 2022 and October 2020 saw moves in excess of 6 to 8% itself. And this is important given the fact that we gained about just 270 points in the September series, and we've actually corrected about 700 points from the September series high itself. Importantly, the rollovers have been on the lower side. So the September to October rollovers are 76%. and this compares with a 79% 3-month average. Importantly, also, the Nifty open interest is on a very lighter footing, 0.97 crore shares. This compares with an average of a little over 1 crore shares as well. So you have lower rollovers, you have lighter positions, and the FIIs are 31% long in index futures itself. So that gives you a sense of perhaps a bit of an up move coming by in the month of October. What are the triggers that would lead to that up move? The first one, of course, will be next week itself, RBI policy outcome. So that's something we'll be watching out for. Second quarter starts, so we'll have the updates, the results. So that will impact sentiment as well. Then we have pre-festive season sales. Ekta alluded to the World Cup as well, so that would be a consumption trigger. Also watch out for crude and commodity prices, and global markets and FII flows, of course, remain supreme.
Okay, guys, looks like it's going to be a very busy October for all of us. But thank you so much for joining us and prepping us up for this trading day ahead. With that, we'll slip into a break. When we return, we'll get you details on India's current account deficit for April to June quarter on the other side. Stay tuned. Welcome back. Let's now get you some important domestic macro cues. India's current account deficit for April to June quarter came in at $9.2 billion, much higher than $1.3 billion in quarter four and higher than expectations as well. Lata is here with the highlights and her analysis as well. Lata.
Well, the current account deficit is lower than what it was a year ago. We are now talking about the April, May, June quarter. But if you compare it to quarter ago, Q4, then the current account deficit is 1.1% of GDP in the quarter that we have just reported, April, May, June. And the previous Q4, it was only 0.2. Now, that performance was so good that the expectation was this quarter, April, May, June also, we will at least report lower than 1%. To that extent, it's a bit of a worry. I just want to say that it's not a huge one. We were very comfortable in current account deficit. Now we are comfortable in current account deficit. So it's not a worry. It's just that it's lower than people thought. The key reason is what I would worry a little more. And that is because services exports are plateauing. In fact, they have fallen compared to Q4. And that's a bit of a bother because we were doing so well over there. There's a category called business services. This is different from software services. Okay, I'm not counting the IT, the Infosys of the world. Business services are audit, legal, other things that India, the middle office that India is now specializing in, that has fallen from $22.2 billion in Q4 to $21.6 billion in Q1. Again, it's not the number that is that's very different, but the fact that it has fallen, because for the last 12 quarters, we've been rising steadily, and that's a bit of a bother that it's, peaking off. The other number that's disappointed me a bit is remittances, Indians living abroad and sending money. This has been a big mainstay for India. First, in the 70s, 80s, it was the Gulf remittances. From 1991 onwards, it's the IT company remittances. Now, this also has fallen, not by much, 28.4 billion, 28.7 billion in Q4 and 27.1 billion in April, May, June. It's a minor fall, but we've not seen a fall. It's been a steadily rising number for as long as I can remember, and that's why this is a bit of a bother. Is our services exports now reached its peak? The strong capital flows that we have got through FDI is more than enough to bridge our current account deficit, which in any case it is not very big, all of $9 billion. But it's important to note that capital flows, especially FDI was very good, not so much FII. But with rising crude prices, the current account deficit is likely to be a little wider in the current quarter, Q3 and Q4. And if services are peaking off, then our current account deficit perhaps will not be, less than 1.5%, which most of us thought. It will be less than 1.5% of GDP. Maybe it will be a little north of 1.5% of GDP. Again, not a worry, but it is just that we were so proud of it, it now looks just a little less shiny.
Okay, all right. Thank you so much, Lata, for making sense of those current account deficit numbers. So from very comfortable, we moved to comfortable position is the take. Moving on now, FTSE Russell keeps India on the watch list for inclusion in the FTSE Emerging Market Government Bond Index. In their annual country classification review, they said that areas for improvement in the Indian government bond market structure remains largely unchanged from the previous March 2023 review. This comes a week after JP Morgan announced that India will be part of its Emerging Market Government Bond Index starting June. Okay, now as we wrap up our breakfast, we get you some somber news. British-Irish actor Michael Gambon, who was famously known for playing the white-bearded Hogwarts headmaster Albus Dumbledore in the Harry Potter series, has passed away. He was 82, tributes poured in for the screen legend from co-actors and Potterheads from across the world.